Hey guys, welcome to the daily analysis for GBP JPY, April 7th, 2009. The time is currently 10:21 GMT. We're looking at a daily chart of GBP JPY. Drawing the upper channel resistance, you can see yesterday's daily candle was a bearish engulfing, and well, it was very bearish engulfing, and we're continuing the trend right now. We do have a daily high at 145 that we are approaching. This could represent a potential counter trend trade short term and a potential trade for a trend continuation. Um, Looking at the downside, the bottom side of the channel right here, and looking at the daily trend line down the CCI, you can see that today's candle has the potential, if it's rather bearish, to continue further moving down, and potentially today slash tomorrow we might continue the bullish trend. Um, Keep an eye out for that. 145 level certainly is a place where that might happen. Look for reversal signals such as the daily close, maybe closing as a hammer candle, or 4-hour candles as a hammer as well. Scooting down to the 4-hour chart, drawing the aggressive trend line that we had, you can see that yesterday we broke down below and we retested this trend line before we continued moving down. That's a common example of old support becomes new resistance. If you took the trade yesterday at 151.50, if you were able to get it, the trade worked out great. It's a position trade, so you should be holding on to it. If you took the trade at 150.00, it did reach its 150 pip take profit, closing the gap at 148.50. If you held on to it even further, you could be 200 pips or more in profit right now. Again, we have this 145 level where I'm looking for a counter trend trade. This would be a buy limit order, possibly around 145.30. That accounts for a 9 pip spread, and the market to go down to 145.20 before it actually bounces. Stop losses for this trade I'm going to use 144.50, right around here. This is just to give it an extra buffer past the support and resistance line. If you feel like the market's not going to break it at all, you can set it even closer. I'm going to use 144.50. Moving down to the 1-hour chart, again you can see the bounce we broke through, rebounded back up, and then we continued the trend. Many of you might have been expecting the trend to continue rather quickly after the daily close, where it closed at the low. It did rebound over the next 2 hours, and then it never broke this range. This was a support and resistance level that the market defined, and many of you might have been getting skeptical that the bulls might be coming back and faking out the bears, and it might not be getting a chance to go back to 145. But as long as it didn't break this 148.25 level, the bears still had control of the market, just because the new trend was bearish and there was consolidation getting ready to make a new low. Looking at the 1-hour trend line on the CCI, you can see that it bounced over the last few hours, and we are in the extreme levels. So if you're trading off the 1-hour charts, now would be a time to consider possibly exiting your trade or locking in profit. Things to look out for at the 145 level is we do have this one bounce here at 145.50. The market may not reach the 145 level, although it should, because of this candle. Just keep an eye out for that. And the new trend is bearish right now, so if we do blow past the 145 level, don't hold on to a bullish trade. And if it breaks 145, you might be looking for another sell opportunity as well. Keep an eye out for reversal signals, continuations, candles, support and resistance that form throughout the day. Trade smart and safe, and have a great day.